Welcome to this explainer. Today we are rolling up our sleeves and unpacking the absolute bedrock of Cambridge Accounting AS and A-Level 9706. We are looking directly into the examiner's reports to find out exactly why candidates, even the really well-prepared ones, consistently bleed critical marks when dealing with books of prime entry. We're talking about the sales, purchases, and returns journals, the cash book, and of course the general journal. Now, I know what you might be thinking. You're sitting there saying, look, I know what a cash book is. I've got this down. This is basic stuff. But here is a massive, high-stakes reality check for you. These topics appear in literally every single examination series. They are inescapable. And yet, students consistently fail to capture what examiners call the method marks. They totally understand the underlying theory, they can talk about it all day, but when the clock is ticking, they completely miss the precise methodological execution that the Cambridge mark scheme absolutely demands. So today we are going to get inside the examiner's head. We're going to unpack exactly how they think, we are going to decode the hidden constraints hiding in plain sight within exam prompts, and we are going to ensure that you extract maximum possible marks in these high-tariff questions. Are you ready? Let's dive in. Here is our roadmap for this masterclass. We'll start off with command word anatomy, jump into a peer deconstruction debate, break down the method mark strategy, run through an interactive spot the flaw workshop, and finish up with a rock-solid final exam strategy recap.
Section 1. Command word anatomy. Let's decode the prompt.
Okay, so the exact content knowledge that you need to deploy on exam day hinges entirely on the hidden constraints embedded right there within the prompt. And there is a stark, absolute contrast between two very common command words that students constantly mix up: analyze and evaluate. Let's break this down. If the exam specifically asks you to analyze the impact of unrecorded transactions in the general journal, you need to realize they are looking for a systematic breakdown. It's like taking apart a watch to see how the gears work. You need to identify the specific components, show the causal relationships, and explain the step-by-step impact on the ledger accounts. It is highly factual, it relies heavily on logic, and it demands precise accounting definitions. That's analyze. But if the prompt shifts and says evaluate the effectiveness of a business's books of prime entry system, we'll stop right there because that is a completely different approach. To satisfy the highest marking bands for evaluate, you absolutely must demonstrate evaluative thinking by actively questioning assumptions. You have to step back and look at different perspectives. For instance, is the cash book actually reflecting current liquidity accurately, or is there a systemic delay in recording transactions? You can't just list out facts anymore. You must justify your decisions with hard evidence pulled straight from the stimulus material. You have to weigh the facts, judge their impact, and ultimately provide a conclusive, reasoned verdict. That is how you dominate an evaluate question.
Moving on to Section 2, the peer deconstruction debate, unlocking those crucial AO bands.
Let's look at how this builds into real-world application by analyzing a classic study scenario involving two scholars from our source material. Let's call them Alex and Sam. Picture them in a digital study suite, sweating over a highly complex, high-tariff past paper problem. We're talking a massive 15-mark question involving a messy, complicated integration of the sales returns journal and the cash book. Now they are fiercely debating how to unlock the top assessment objective bands. You know them: AO1 for knowledge, AO2 for application, and that tricky AO3 for analysis and evaluation. So Alex is highly technical. He pushes hard for a purely factual approach. He's arguing that simply ensuring correct formats and posting the totals perfectly to the nominal ledger is what secures the method marks. He just wants to get the numbers right. But Sam, who approaches the problem much more conceptually, pushes back on this. Sam argues that, sure, the numbers matter, but to get those elite AO3 marks, they have to establish broader cross-topic connections. Sam points out that they need to explicitly explain how a failure to update the sales returns journal doesn't just sit in a vacuum. It cascades down. It negatively impacts the trade receivables control account, and ultimately it distorts the final financial statements. This is a brilliant illustration of a core lesson directly from the examiner reports. Alex is laser-focused on the procedural framework, which is undeniably crucial for AO1 and AO2. But Sam is focused on mapping the causal relationships, which is the key to AO3. The absolute truth: you need both. Principal examiner reports explicitly highlight that candidates who reference cross-topic connections and map out those causal relationships achieve significantly higher marks. You can't just be a calculator, you have to be a strategist.
Which brings us to Section 3, the method mark strategy and critical roadblocks.
Okay, so right as Alex and Sam are about to tackle the absolute hardest part of this accounting problem, reconciling a massive discrepancy between the cash book and the general journal, they hit a wall, a major roadblock. They are losing precious time, and their paragraph linking is just completely falling apart. Now, before I reveal the cognitive strategy that gets them unstuck and saves their grade, I want you to pause for a second. If you are serious about mastering these exact frameworks and dominating your Cambridge papers, make sure you subscribe to Ace the Exam's IGCSE O and A levels at the handle @AceTheExamIGCSE. Hit that subscribe button right now and enable all notifications so you never miss one of our weekly strategy breakthroughs. All right, let's get back to Alex and Sam and see how they fix this mess.
So, why were Alex and Sam stuck? They were stuck because their procedural framework was totally collapsing under the pressure of a high-tariff question. The crucial point here, and you really need to write this down, is that the presentation of information in books of prime entry follows strict, uncompromising conventions. Let's emphasize these 4 distinct pillars on the screen right now. First up, headings. Proper alignment and usage aren't just there to make your paper look pretty, they are structurally required by the mark scheme. Second, terminology. You absolutely cannot use vague, everyday words. You need context-specific application. For example, knowing the exact difference between discount allowed and discount received and applying them perfectly. Third, formats. You must follow strict syllabus conventions for your cash book and your journals. Don't invent your own layouts. And finally, annotation. The General Journal explicitly requires clear, verified narrative data. Listen to me on this one. Without a narrative, a journal entry is fundamentally incomplete and you will instantly lose the method mark. Examiners award method marks for the process itself. If your procedural framework is flawless, you collect points along the way, even if your final calculation goes slightly awry. The process is everything.
So, armed with this exact framework, Alex and Sam start rewriting. And the transition from a flawed, rambling paragraph into a flawless, full-mark response happens out loud in 3 very clear steps. Step 1, they apply the correct formats. They take the time to align those cash book balances properly. Step 2, they strip out all their generic phrasing and swap it for appropriate syllabus-approved terminology. No more saying money owed, they use trade receivables. Step 3, they evaluate performance by linking the raw data back to the business's overall liquidity position. It is honestly a beautiful transition to watch. They go from a mediocre, confused answer to a laser-focused, top-tier response. Applying this practically in your books of prime entry develops professional accounting skills, and strictly following this 3-step execution rule is exactly how you prove those skills to the examiner.
All right, let's put you in the hot seat. Section 4, Pause and Practice. This is an interactive workshop.
I want you to imagine a complex stimulus text just appeared on your exam screen. It's a messy, disorganized list of daily transactions involving cash sales, credit purchases, and a bunch of returns. And you have exactly 60 seconds on the clock. The clock is ticking down right now. Under actual exam conditions, you simply cannot leisurely read through the data like it's a novel. You have to systematically extract the relevant data immediately. You must instantly, in your head, categorize which transaction goes into the sales journal, which one belongs in the purchases returns journal, and which one completely bypasses the subsidiary books and goes straight to the general journal, like, say, the purchase of a fixed asset on credit. Time management isn't just about writing fast, it is a cognitive strategy. If you do not extract and categorize this data within the very first minute, you will completely run out of time to actually evaluate it later on for those AO3 marks.
Okay, time's up. Let's move to our Spot the Flaw exercise. I want you to look closely at this text comparison on the screen. The generic student answer reads, "The business had returns, so they put it in the returns journal to keep track of inventory." Now, honestly, what's wrong with that? Well, it's vague, it uses really poor non-syllabus terminology, and it doesn't connect to the specific scenario at all. Now look at the winning, context-specific answer right below it. The $500 return from trade receivable J. Doe must be recorded in the sales returns journal and posted to the debit of the sales returns account and the credit of J. Doe's personal account, directly impacting the trade receivables control account balance. Do you see the massive difference there? The second answer uses precise definitions, it applies the correct terminology, and crucially, it shows the exact causal relationship to the control accounts. That is an A-star answer. I really want to systematically highlight exactly why that first generic answer fails so miserably. These are the top 3 examiner warnings pulled directly, word for word, from principal examiner reports. Warning number 1, using the wrong approach for the context. This is the classic trap. You memorize a formula perfectly, but you apply it to the entirely wrong scenario. Warning number 2, forgetting to check format and presentation. A beautifully calculated cash book that is missing proper headings or dates will lose massive method marks. The math doesn't save you if the format is broken. And warning number 3, and listen closely because this is the biggest exam killer by far, providing generic, non-specific answers. The absolute classic mistake is writing an answer that could apply to literally any business in the world. Always, always, always link every single point you make back to the specific given scenario, the specific names, and the specific data provided in the prompt.
Let's bring it all together. Section 5, Strategy Recap, and our final evaluation pillars.
So earlier, our case study scholars Alex and Sam had a massive breakthrough during their session. They finally realized that when an exam asks for a comparative analysis, let's say comparing the utility of a 3-column cache book versus a 2-column cache book, it fundamentally requires identifying both similarities and differences. You can't just do one. You absolutely must use comparative connectives like whereas or conversely. You have to support each comparison with hard evidence from the text. And most importantly, you have to draw conclusions about their relative importance to the business. And this brilliantly leads us to our guiding principle. I want to synthesize this entire masterclass with this direct, powerful quote from the Cambridge Examiner reports. Top-scoring candidates demonstrate evaluative thinking by questioning assumptions and justifying decisions with evidence. Let that sink in. This is your ultimate goal. You are not just a human calculator adding up the purchases journal. You are an analyst. You are looking at the books of prime entry and asking, is this system robust? Is it failing? What evidence do I have to prove it? That evaluative mindset is exactly how you secure those elusive top bands.
To ensure you execute this flawlessly on exam day, here is your complete methodological toolkit distilled into 3 core, highly memorable pillars. Number 1, the 3-step question scan. First, you deconstruct the command word. Next, you extract the relevant data from the stimulus materials. Then, you identify the hidden constraints. Number 2, the paragraph balance formula. You select your analytical framework, ensuring that every single paragraph has precise definitions, context-specific data, and an evaluative conclusion. Number 3, the last 5 minutes review checklist. You meticulously verify your results. You check your formats, you check your alignments, you ensure your narratives are present in the general journal, and you verify that you are presenting everything with the correct syllabus-approved terminology. This framework right here is your absolute shield against losing those critical method marks.
The framework is now yours. But you need to ask yourself something. The next time you sit down in an exam hall with a messy general journal question staring back at you, will you just be a human calculator blindly balancing the books? Or will you step up and be the analyst who uncovers the financial truth hidden in the data? Strategy is everything. If you want to keep crushing your Cambridge exams with us, make sure you hit that subscribe button for Ace the Exam's IGCSE O and A levels at acetheexam_IGCSE. Turn on that notification bell for future exam hacks. And right now, go down to the comments and leave a comment with your target grade to solidify your commitment. Keep evaluating, keep strategizing, and thanks so much for joining this explainer. I'll see you in the next one.